Hey, welcome everybody to the show today. We're talking about some crypto news, and I have a special announcement from our main sponsor today as well. But before we start, I have to mention just a few reasons why we should be optimistic as everyday investors, especially those that are interested in property or real estate for our international friends. It's a very tentative mission accomplished with regards to the battle on inflation, and that's sending an interesting signal to investors around the expectation on interest rates. Now, I like to be balanced and consider both options, and both options meaning higher interest rates for longer or lower interest rates and faster. There's mounting evidence that greed may be sneaking back into the market. Perhaps a reduction in interest rates, perhaps a shift back to the center or even a bit to the right in the political realm. Maybe all that will point to stronger tailwinds ahead for everyday investors, at least not the massive headwinds like we've been feeling recently. Our global economy, with the debt structures the way they are on a knife edge, is dependent basically on cheaper credit. Now, in New Zealand recently, for example, we've seen a new government come to power who've decided to restore some of the tax rules that made property investment a viable asset class in the past. We're also getting much needed tax cuts, which may offset the pain from inflation for those carrying the biggest load. Our central bank is being given a much more narrow and simplified mandate, which is to focus on inflation. How good is that, though? You have just one job to do now, right? So there's hope, right, that both for the Reserve Bank of New Zealand and our government, that they might start doing a better job at dealing with inflation in the future. As investors, this means more stable interest rates. So this is all about confidence. Now, on the other side of the coin, it's also a confidence that could go too far. Too much cash might still be in the system, at least with those who already have a lot of resource behind them. So it could trigger off another bout of greed, even if it is by just a fewer amount of players. And just they could make assets take off again. Need more evidence that risk is making a comeback? Will go no further than crypto. I believe it's not just about making money when you're investing, it's about preserving your ability to do with your wealth as you wish in a digital age. That's why crypto. Many investors don't view it that way, though. It's a way just to get rich. They just think about the money that they might be able to make rather than the money that they need to translate. Now, I feel decentralized finance, and Bitcoin specifically, can really change the world for good. Whether it be for world peace, though, and a kumbaya sort of thing, or for an outsized good return, it doesn't really matter, right? Either way, I still hope you can enjoy this podcast today. Now, recently, the SEC, a U.S. financial regulator, took down another high-profile player in the crypto ecosystem using a strategy called regulation by enforcement. For the layman, that just means punishment without clarity on the rules. That's what we're going to talk a little bit on today. It may be the only way for regulators to do their job, but still, I wonder if crypto regulation, authored by the most trusted industry participants, may be a better way forward. After all, was it not banks who created and still maintain the U.S. Federal Reserve System? Did they have to endure regulation by enforcement from an outside authority? Think not. Meanwhile, it's almost 2024 and the price of Bitcoin has more than doubled from the start of this year. If your financial advisor or fund manager has been successful at keeping you safe from these returns, maybe it's time to have a fresh conversation with them around why. I've been banging the drum on this for over 5 years, but again, not for the gains. It's for the protection to your wealth that it can offer through better diversification. Anyway, today I have 3 guests from Easy Crypto on. Now, Easy Crypto is a company that makes it easy for anyone to buy, sell, or now store crypto in New Zealand. They are Janine Granger, Paul Quickenden, and Johannes Gertz. The NZDD, a stablecoin pegged to the New Zealand dollar, and a new digital wallet with a novel approach to security. Crypto or digital assets could and should be looked at as a legitimate tool for everyday investors to build wealth. A small allocation to this space is as much about creating a wider spectrum of diversification as it is a chance to achieve outperformance in the digital age. Do your own research here, but if you would like to get started with crypto, please do reach out first for advice and get a strategy, and then check out the referral code in the notes to sign up with Easy Crypto. They're the main sponsor of this podcast, but by doing so, you're also going to be able to help this show in the process and use the same provider that I use to regularly buy a little bit of crypto as part of my overall investment strategy. All right, let's get started. You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow the Everyday Investor on all social media channels. The NZ Everyday Investor Podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial Advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started. So we've got a lot of items to cover off. We have a stable coin, we have a wallet. Congratulations. These are two massive announcements today. And we have a lot of price action in the Bitcoin sphere that I want to talk about. We have some interesting moves in the global south with Argentina, new president there who's very Bitcoin friendly apparently. We have crackdowns on Kraken. We have busting Binance. I'm not really a journalist here, so I better shut up. But there's a lot of stuff going on I want to pick your brains on. So let's start with NZDD, the new stablecoin that's been launched today, I guess. Let's start just with the basics. What is a stablecoin, Paul?
So a stablecoin is a dollar. In our case, it's a dollar representative in a digital form. So it's stable in that it represents the same currency that it represents. So
like one-to-one type thing.
Exactly. So in our case, it's a New Zealand dollar, but it has all the great attributes that blockchains bring. So instant settlement, really low fees, 24/7. All of those great things. You can use it in DeFi. You can use it, in payments and all those other things. Just representing stability rather than other coins, which are a bit more volatile.
Volatile, right?
Yeah.
So because it's pegged 1-to-1 to the New Zealand dollar, what is the use case for a stablecoin?
So if you're someone who's into trading, then it's something that you move in and out of the volatile assets out. So buying Bitcoin, it's hit your target, it's 37.5 today or something, and you're going, I'm out, and you sell down into the stablecoin, and then you hold your gains in the stablecoin. Then you don't have to kind of go the next step, which is into banking, so it just speeds it up.
And also there's a really good tax benefit there because a lot of our customers will trade in and out of US dollar stablecoins at the moment, but then you have to account for the tax on the gains or losses on the US dollar stablecoin, which is just a real complexity. And also, as a user, you're facing that Forex gain or loss. Yeah. So moving into a New Zealand dollar stablecoin, there's no tax versus the New Zealand dollar because it's always 1-to-1, and you also don't have that volatility of what's happening with the US price market.
Yeah.
So serving the local New Zealand dollar denominator.
So for example, NZ dollars moved 2% overnight. So there's just there's kind of double volatility going on there. So that's the trading audience. And then for other people, you can gift it to your whānau. Here is a gift card. Use payments. So blockchains are wonderful. If you can scan the QR code, which is the wallet address, you can send to that really simply and easily. Sure. Very low fees, instantly into your wallet.
Yeah, I could send Paul some stablecoin now and I get to his wallet within seconds.
Yeah,
right.
Which you can't do with banking, right?
And that's 24/7 and globally, right? So if
you were a business owner and you had employees all over the world and you wanted to pay them in New Zealand dollars, this is an absolute dream.
Yeah. So stablecoins have really found a great product market fit, and that's a classic example. And we've seen it in some of our customers who have got offshore vendors. In fact, we've got staff offshore who we pay in stablecoins because obviously they don't want to have the exposure to the volatile Bitcoin or whatever it is. Right. So there's those kind of use cases as well.
I've actually seen that increase. A lot of our customers, I've noticed recently how many more business customers we're getting onboarding who are either receiving payment from overseas customers in crypto assets or paying staff over or suppliers overseas in cryptocurrencies. So it's definitely gaining adoption. There's one other really big thing about stablecoins, which I'm really excited about, which is if you sort of step back and look at the broader trend we have of assets are digitizing, right? So, cryptocurrency started this idea of digital assets and enabled that to happen. But now we're having money going online. In the future, we'll see stocks and shares go digital. We'll see other assets like housing titles, identity, all sorts of assets will be digitizing. And so stable coins are a really important part of that future digital financial infrastructure.
Is that because it will be denominated in New Zealand dollars potentially?
And so the dual things of one stable price and a price that is, what people think, and it's a useful everyday currency for New Zealanders, but also it's programmable. And this is something that's super exciting. Like, what does programmable money mean? What will it look like if we can say, say you receive your salary into your bank account and you can automatically have it split across into, I want it to go into different accounts, I want to pay different people, I want to have some go to charity, some go to my mortgage, this and that. Or as a business, say if you have employees that are working on digital tasks, like maybe they're writing blogs or doing other things that you can measure digitally, you can have payments streaming out to your employees as soon as they've completed tasks. So you have to, that can get rid of your need for payroll. It also reduces that creditor risk that, if you go under as a business, your employees don't get paid. So it's like, it can just make things so much more efficient, trustworthy, and just like remove the time and cost of doing payments or doing things with money.
Because a lot of this might be difficult for people in the analog world, almost to dismiss it, but this is a transition, so it just takes time to kind of understand the language and what we're talking about. Hopefully we're not losing anyone here, but in a sense, you can kind of think of the NZDD as a swim-up bar, maybe in a pool, where you don't have to get out of the pool to get a drink.
Sure. That is the best analogy I've heard so far. Or we're gonna put that on the site.
Yep, do that. Except
you talk. I mean, you're a small business owner. You think about what you have to do with GST every month, right? So imagine if a smart contract just took in the gross payment and then took the GST out and just put it into a separate wallet. You didn't even have to think about it. And then when you have to do the payments, send it off.
It'll automatically send it off to the IR when it's due, incur interest for you in the meantime. Like, it's making money smart, right? It's doing what, money's been stuck behind the closed walls of banks and sort of, you can't get your money to act and move how you want it to. You're quite limited. We just moved to 7-day banking. Huzzah. But there's still so much limits around what we can do with money. So
we still have to move it, right? We have to initiate something.
And you can't have code or programs or AI doing things on your behalf of money. So this really opens that up. So enables, AI-enabled, programmable, that kind of stuff.
Sure.
And one of the things on that note, actually, I'm really excited about where this will head in the future and how people can build on this. And I think, I can't imagine all of the use cases we can do with programmable money, but I know there are, other smarter minds out there than me. And so we've got a grants program. We've partnered with Callahan on that. They've got, their existing grants. We're working with Web3 NZ to, if there are people who are builders, innovators, have cool ideas for what you could do with NZDD, come and have a chat to us. And there's grants available to help make those things a reality.
Yeah, that's cool. Like, I think about businesses that I've had on the podcast ages ago, like Henry with Henry, right?
Yeah.
And that's kind of like almost what we're talking about here, what they do, where payments come in and then it's divided up accordingly. That could all be handled by a smart contract with NZDD.
100%, yeah.
Wow. Okay. So I did do a podcast a long time ago with the Reserve Bank of New Zealand around their central bank issued digital currencies. And so when I think about stable coins, the first thing that comes to mind is, hey, we have this regulator, author and perfecter of our monetary system, the Reserve Bank of New Zealand, Central Bank of New Zealand. Is this something that is an example of what they will be doing? Like, is this a type of CBDC in a sense, in terms of how consumers might interact with it?
Yes, I think the big difference between stablecoins and CBDCs is who the issuer is, right? So CBDC will be issued by the Reserve Bank, a central bank digital currency. So everyday New Zealanders can directly hold government-issued money instead of having to have, at the moment, the money in your bank account is not actually real money. It's an IOU from your bank. So it's a very big difference and a big shift to be able to hold money directly issued by the Reserve Bank, by the government. Stable coins, have a similar niche in that, these are both programmable money. They're both one-to-one with the New Zealand dollar. But in our case, the issuer is NZDD. So it's a private company issuing this digital currency rather than having it issued by the Reserve Bank.
Right.
But very similar. And I think there'll be similar use cases, similar things you can do with it. And I expect both of these things to coexist in the future in countries all around the world.
Okay. And so when you were developing NZDD, the mechanics behind it, just for those that might be interested, just how it works, because if it maintains a one-to-one peg, how does that actually work in practice?
So sitting behind it is a bank account. You put in $100 into that bank account, and we will then issue you $100 worth of stable coins, and that's how that works. And when you come to redeem it, we will always give you $100 back. So if you send back 100, we will give you 100.
Right.
And so that's how that peg's maintained. And then on exchanges and markets like Easy Crypto, which is where you can buy it at the moment, there's obviously a pricing mechanism there, and we're just making sure that the peg is maintained on Easy Crypto.
Right.
So that's just how that stability is maintained.
Right. How is that monitored, or what kind of regulation does that fall under to ensure that there is actually that money in a treasury to back up that?
So we're a business that will have regular audits with a tier 1 auditing partner, and they'll make sure all of our financial processes and our technology processes and all that sort of stuff are in place to honour that effectively.
Yeah.
And they check that every NZDD on issue out on the blockchain is backed with a New Zealand dollar in the bank account. And so those will be publicly available attestation or audit reports to give everyone the confidence that, when we say there is this much in the account, we make that publicly available, visible.
Sure.
And people can see that it matches up.
Cash in account, not treasuries, not
treasuries, no.
Not Bitcoin.
We will not be holding reserves in Bitcoin.
No, so it's a cash-based mechanism.
Otherwise, it wouldn't be a stablecoin.
If we are incredibly wildly successful, and over time there's a chance that we might end up with some New Zealand government bonds.
Yes.
Because of rules in the banking sector, actually.
Right.
But at the moment, it's cash.
Okay. Right. I have many more questions, but that's outside of this podcast episode. Okay, and the revenue model. One last question on NZDD before we move on. The revenue model is the interest that you're getting on the bank accounts, presumably.
Yeah, and so the issuing company NZDD derives its incomes and pays its bills off the interest income.
Yeah,
and other businesses like you were talking about, like Henry and all those, are going to make their own business models around that. Easy Crypto is a business that makes trading fees, revenues.
Yes.
The pricing on our site is designed to help that. So there's, I don't think there's any embargo on the pricing. Like there's no trading fees to go from New Zealand dollars into the stablecoin. But if you move from the stablecoin into something else like Ethereum or Bitcoin,
I see,
there'll be trading fees.
Got it. So it's kind of like your cash management account within your brokerage account.
Exactly.
Yeah, exactly right. Yeah.
Okay. Oh man, I do actually have a lot more questions. We'll move on. We'll move on because there's so many other things going on, and the Easy Crypto wallet is really, really fascinating because I have several wallets myself. That's just
how many, Darcy?
I have 5.
That's slightly
Is that a sign of
above
prestige?
average.
Is that a sign of prestige, or is that more like you're a bit paranoid?
Well, when I surveyed a whole bunch of customers on this, 4 was the average number of wallets that people held.
I like
But
to
when
be just
when
above
I talk
average.
to DGens, they're more like getting into double digits. So
Right. Okay,
Yeah.
so I am just above average, which is consistent with every other part of my life. Perfect. All right, let's talk about this new wallet, though. Is it called the Easy Crypto wallet?
Yes, it is.
Okay, let's start really, really basic for those that don't have a massive crypto understanding. What does a wallet do?
It holds your crypto, and you've got a private key, and that is what you need to use to make a transaction, for example.
Yeah, cool. So it's going to hold your, I guess technically it's holding your private keys, right? The wallet holds your private keys.
Yeah.
So this is a program, it's an application, and I know, like from my perspective, I've got a cold storage device, and then I have hot wallets. So with the Easy Crypto wallet, that is a hot wallet, correct?
Yeah, software wallet. Yeah.
Cool. So in terms of the development of that, how does it get built? Take me through the very, very beginning.
Pretty much a year ago now, FTX and a whole bunch of other platforms blew up. And so FTX being the second biggest custodial exchange, had made it really clear that having someone else look after your crypto is a really bad idea. And so Easy Crypto has always been non-custodial, and then for a wallet, you should hold your private keys so that you're in control of your funds. It also means you need to back it up really well, of course, so you don't lose it, because with an exchange you could go to them and get your account reinstated. So, so the Easy Crypto wallet is a non-custodial wallet, and one of the issues with pretty much all existing wallets out there now is that they're seed phrase based. So you set up a digital wallet on your phone, but you're asked to write it down on a piece of paper. your backup, and then
Yeah,
and then
well,
keep
the
it
future, right?
yeah, keep it safe. And there are lots of issues with it. Like you could misplace it. Could be a house fire. You could lose it. Floods in Auckland now or whole of New Zealand.
Or if someone else gets hold of it, they have access to your entire wallet as well.
Yeah, there are no additional checks. So anyone with your seed phrase can drain your wallet. We can't put any additional checks on top of that to make sure, hey, are you actually the owner of this? And what we're doing with the Easy Crypto wallet is we're using, it's fairly new technology in the wallet space, is multi-party computation. So we don't hold the seed phrase on your device, the whole seed, and instead we're breaking it up into 2 key shares. And one you hold on your device and backup, and we hold one. So to make a transaction or to restore your wallet, you need both keys. So because we only hold one, never have control of your crypto, which has always been really important for us. But for example, if you want to restore a wallet or if you make a transaction, we can layer additional security measures on top. Like, hey, if you want to restore your wallet, first you need to log in. We need to make sure it's you, or you can enable multi-factor like biometrics on top of that before you can restore your wallet.
So just to make sure I'm with you here. So we have this. Just going back to what you were saying before, we're talking about the failure of FTX, which was the big story last year, and not your keys, not your coins. Learn that lesson. The best solution is to hold it on your own wallet. The problem with holding on your own wallet is that while you can still interact and everything's all easy peasy to a certain extent, if you lose your wallet, then you need to actually use your seed phrase. But what you're saying here with the multi-party computation, what that involves is your seed phrase is basically split into 2. Is that right? Yeah. And then you would still have to copy down a seed phrase, right? But
no. So this is the whole seed phrase thing. Like Joe said, multi-party computation, MPC. It's new technology in wallet space, but it's not new technology in cryptography. Like it's been around since the 60s. It's been really well tried and tested, particularly in the B2B space. So some like really big crypto companies like Fireblocks have been using it for quite a long time. And so I'm a big believer in this as being the way forward for crypto. Like I think we're moving to a post-seed phrase world.
Okay.
We've all known there's really big issues with seed phrases, and you've seen big advancements come out with things like account abstraction. For anyone who's kind of deep into Ethereum tech, that was a huge big huzzah earlier this year when they launched that. And these are ways to, it basically abstracts away your seed phrase. So the seed phrase still exists, but you never have to see it or write it down or engage with it. And that means that you can wrap better protections around it as well. So like Joe was saying, instead of having, just this one thing with no checks and balances, you can wrap around, having lots of second factor authentications, passwords, biometrics, like whatever you want to put on top of that, you can add in, as many checks and balances as you want to really protect and ensure that the recovery is secure and can only be done by you. It doesn't affect your day-to-day use of the wallet, so you can still sign your transactions super easily, really seamlessly. It's just the recovery is now.
That's what you're saying.
Yeah.
Right? Yeah. So if you lost your phone with the wallet installed on your phone, then the seed phrase, which is just a string of words, random words like tree and house and husband, and hopefully those aren't mine. There's more than that.
Keep going.
Yeah, keep going.
I need 9 more.
Yeah. So there's these 12 random words in order, but what you're saying is that if you lost a phone, am I safe from myself, I guess is what I'm asking.
Yeah, we put a lot of thought into how we keep that safe and back that up for you. So we've got 2 backup mechanisms. One is a fairly novel way of doing social recovery. So if you've got 3 trusted friends or family, you can invite them to become your guardian. Mm-hmm. We essentially take a backup and break it into 3 parts so that none of them hold a full backup of your wallet at any time as well. That's shared with them. And then should you need to recover your wallet, you send a recovery request. It goes to your friends or family. They can confirm it's coming from you. They can give you a call, double check, approve the request, and then we can restore your wallet. And let's say if you've got 3 guardians, you only need 2 to respond to you.
Got it. 2 or 3.
Yeah.
Which was handy for me because I accidentally deleted my wallet when we were doing our testing.
Yeah.
And I had Joe as one of my backups with 2 others, and he'd also deleted his wallet because we're all testing at the same time. But my 2 others got it back for me. So I got my $79 of test Ethereum back. So it was
Well, that's a good way of testing it. So it actually works.
it works.
So the analog is, I don't know about your family, but in my family, I've got to manage all the passwords for all of the generations before me, right?
Yeah.
That's right. And so that's the analog version of that. And so when they need to log into their Wi-Fi router, I've got to go through the list of stuff. And so what we've done is created this Guardian technology where the seed phrase can be restored by trusted people. They can't collude because you don't know who the other people are.
I see.
And
But also we can put protections on that. Like if if someone tries to install Paul's wallet, we'll flick him a message and be like, hey, just give me a heads up. And so you've got, it's being able to put the user experience or the layers between it. With a seed phrase, it's just anyone who gets it can do anything they like with it. Whereas with this, we can put in layers of checks and balances.
Perfect. And what I love about it is that when I talk to everyday investors who want to get involved with crypto, the biggest issue is this:
wallet,
freaking wallet.
Yeah,
because it's the seed phrase. It's confusing. The user experience is just that's where it always falls down.
Yeah.
But that's also the greatest part about it, I think, is that you are a direct custodian of your digital assets. You can't have that in the analog world. Not really. Unless you're physically holding gold.
Yeah.
You don't own your shares. You don't own your managed funds. You just own claims to it.
Yeah. So being able to have that direct custodian, but combine it with a recovery setup that makes a wallet effectively unlosable, that's where we need to be heading as a crypto ecosystem, because it's just not safe or comfortable for people otherwise.
Yeah.
And to me, the thing that's absolutely revolutionary, and it sounds so stupid about our wallet, is it holds Bitcoin. Like, that sounds so stupid to say that, but most of the wallets that are experimenting with this type of technology are very, very Ethereum or Web3. They've gone that way
because it's easy to build on that. Obviously,
and our business, we can see like the number one asset people come to us to buy is Bitcoin, and so for us, and
we're working really hard. We've got around 50 coins in the wallet at the moment, and we're working hard to get parity with Easy Crypto. So over the next couple of months, we will be in a position where everything you can buy or sell at Easy Crypto, you'll be able to store in the wallet. And to Paul's point, Bitcoin's our number one traded coin, not stored in most wallets out there. And if you go to the top 5, which includes Ripple, Doge, and Cardano, most wallets, there are hardly any wallets out there that will store all of those. So
that's right.
Yeah, I think there's this bit of tribalism in crypto where people just support what they like and what they're passionate about, but not really looking at actually what's the real world user wanting and what are they engaging with.
Okay. And Johan, was that difficult to get all of the crypto assets talking to each other and playing nicely in the same wallet?
Yeah, it's a big lift because
it's the reason people don't do it.
He's done it with hair.
Right. He started with hair. Yeah, dreadlocks.
Different chains have a completely different integration, so they all have to be integrated individually. Some of the Ethereum-based coins that's easier, like ERC20 tokens, but some other blockchains like Cardano are a bit harder to integrate. So we're chipping away at that and looking to get really wide coverage. Very quickly.
And how many assets are available on Easy Crypto right now?
Easy Crypto's got around 160.
160. Yeah. And so the wallet is right now can hold 50. Yeah. Yeah. And so that's the idea. What you were saying before is that you want to get all of them. Yeah. In that wallet.
Starting with the top ones, the most commonly used. So I think XRP will probably be next for us to launch, followed by Solana.
Cool. Yeah, and we are already Bitcoin, Ethereum, stablecoins, NZDD.
Of course,
of course.
And Matic and a few others. So there's really solid already, and we'll just add more to it over time.
Okay, cool. Like right now, if I wanted to own NZDD, going back to the very start of the podcast, how do I own NZDD now? Do I have to have a wallet? Mm-hmm. I jump on, sign up to Easy Crypto, set up an account, and it's available right now to buy? Yep. I think I saw it last night, actually.
And so the easiest thing for you to do would be to download our brand new wallet and go through that journey. If that's a bit hard for you, then you can use existing wallets.
Are you saying I need to get a 6th wallet?
I'm saying you need the one wallet to rule them all.
Bring all your crypto over to the Easy Crypto wallet.
So you can add new tokens to wallets, and there's we've got information on our website on how to do all that for the common wallets that we've seen out there, and it's basically a process of putting in the contract address into the wallet, and then it goes, oh, here it is. And because it's a little scary if you don't do that, because you bought it and you're going, hey, I can't see it, and then you've got to add the wallet, the contract address. So there is processes to do that.
Okay.
Yeah. So
if in doubt, reach out.
If in doubt, get EC Wallet.
Yeah.
Okay. But contact Paul directly.
Contact Paul, yeah.
Yeah.
Awesome. Now let's keep on going. There's been a lot of really cool stuff in the news. I've seen the thing that I think is interesting is, like, I'm probably more on the spectrum of like a Bitcoin maximalist versus a multi-coiner, I guess you could say. Forgive me if that offends you people.
Not us, but just a lot of your listeners probably.
Yeah, that's right. Because I just like it. It's finite fixed money, right? Sound money. So I've seen, as anybody would have since Bitcoin's existence, that the price action just goes berserk every 4 years. So we're talking about the halving cycle. Firstly, let's explain what the halving cycle is.
Sure. So Bitcoin...
I've never been asked this question before, haven't you?
Sometimes it's a bit of a misnomer that halving means Bitcoin's going to be cut in half or the price is cut in half or something. None of that. What it is that the supply of new Bitcoin entering the system is halved. So miners are running the blockchain network. They're the ones who help the system to run, and the amount of reward that they get given for their work halves. So at the moment, if you're a Bitcoin miner and you add a new block to the blockchain, you get 6.25 Bitcoin. Around April next year, around my birthday, that will halve to 3.125 Bitcoin. So it's effectively a reduction in supply. So supply and demand, right? So the supply of Bitcoin will drop in half, or the supply of new Bitcoin entering the system. And so there's typically an expectation that this has an impact on price.
Yeah.
As an economist, I find it really interesting that we all talk about the halving and how we expect that, people generally expect this to have big price movement. This is not an unexpected thing. It's like literally written in the code. It is absolutely guaranteed that the halving will happen. So the fact that it isn't priced in now is,
Yeah. That happened again?
Yeah.
Happened again?
Wow. But,
it actually works.
But, and again, past returns, never an indication of future action. However, this is sort of what people commonly talk about is the halving cycles result in price movement.
Yeah. And the thing that I learned on another podcast this year was, or my guest that I was talking to, Michael Nadeau, his name was, yes, it was. And he was talking to me about the halving cycle and how it's interesting because it's also correlated to the global liquidity index. In other words, how much money there is that's out there in the world washing around at any given stage. That tends to peak roughly around that halving cycle time. Yeah. And so his thesis was that, it might not actually be causal. Yeah. It might be a little bit, but it's hard to say. It could actually just be correlated to the fact that there's a lot more money looking for a home, and maybe that could explain the previous bull runs, perhaps.
If you're interested, global M2 is starting to creep up.
Well, isn't that that's right? Fascinating, isn't it?
Isn't it just?
Fascinating. And like Willy Woo is another interesting guy who puts out, I think it's great that people put out predictions. It's just got to realize, and I think he does as well, that they're not often correct. But yeah, he put out a tweet recently saying we will never see Bitcoin below $30,000 again, is effectively what his saying was. But he also told me a couple of years ago that Bitcoin was going to be 200 grand before the end of the year. And neither.
Yeah. I'm never one to put out predictions, but it is really interesting that not only do we have the halving coming up, which is the cycle, and maybe it's not around the halving, maybe like you say, it's around global money supply, it could be all sorts of things. But we've also got very high likelihood of a Bitcoin ETF to be launched, within the next few months or even few weeks, right? Paul, Bitcoin ETF, why does that affect prices?
So this particular Bitcoin ETF will be different from the ones that exist already because it's a spot ETF. And what that means is the 9 companies have got their applications in. When they get an order for a unit of their ETF, they actually have to go and buy Bitcoin off the market. And they're going to have to take that out of supply and put it into a custody arrangement, which will be Coinbase or something like that. So you talk about supply and demand. We suddenly have, the world's biggest asset managers, let's be honest, Invesco and BlackRock and Van Eck, all sucking supply out of the market around the same time as new supply diminishes by 50%, 100%, or whatever the number is, 50%. So it has, and an ETF is particularly important to people like the large pension funds or even people who are self-managing in there.
That's right.
I think in America it's called a 401k.
Yeah.
Because it means they can buy a unit without and add that into existing portfolios, and their rules allow them to do that.
Right.
Because at the moment, if it doesn't meet the right stipulations, you can't add it into your your diversified portfolio.
That's right.
And suddenly having an ETF, which gives you exposure to the price action, but abstracts you from the blockchain complexity.
And it's kind of like another evolution of what we were talking about before with with FTX, right? As an exchange, you could hold your asset on the exchange, ideally hold on your wallet.
Yep.
But then the next level, maybe it's the next level, I'm not sure, would be an exchange traded fund. It's a traditional TradFi wrapper around that, but it's kind of the same concept where your custody is being taken care of for you.
Yeah.
Which then makes it possible for financial advisors to recommend, a lot more financial advisors to recommend it because they're getting paid from it.
That's right.
As well.
So the 2 and 20, so you're going to take, let's be very honest, you're going to take a bit of a haircut because they're going to charge you fees, as opposed to the way we do it, which is you can natively own your own Bitcoin.
Correct.
So
for it, obviously, but
not 2 and 20.
Yeah.
Right. So definitely not 2 and 20. So that will also, and I'm not, this isn't me, this is the market saying that just opens up Bitcoin to a whole new trillions and trillions of dollars of potential buyers, right?
That's right. Yeah.
And if you're a financial advisor and you look at the table of assets over the last 10 years, 5 years, the best performing asset on the planet is Bitcoin.
Yeah.
And if your financial advisor, your fund manager isn't adding Bitcoin into the mix, you should be asking why not, because you are missing out.
So I think, though, that it's interesting because we have this unstoppable force meeting the immovable object with this Bitcoin ETF, this phenomenal amount of funny money, fiat currency that will be hitting this finite supply. There's only one possible outcome, you'd think, which is interesting because we're going back to the halving cycle. We have that dynamic going on. Then we have the ETF, which could be really any day. And then you start to kind of speculate, well, how does that play into the price action this year? We've seen Bitcoin go from mid-teens to now mid-30s. It's pretty insane to see that happening, and people are speculating, well, is this because these large fund managers are anticipating this is happening? Have they been scooping up Bitcoin throughout this period of time? Has some of the fear, uncertainty, and doubt that's been put out there in the market, or has some of the actions by the SEC potentially suppressed the price? I know that's probably going on the edge. Any thoughts on any of that?
So there are people who've been looking at this way more than me, and every time the SEC does a denial, the price doesn't move. So their hypothesis is that the ETF is not quite priced in yet.
And we saw that actually when CoinDesk did their rogue tweet.
Yeah.
A top media agency in crypto released a tweet saying that an ETF had been approved. Price shot up 5% in a couple of minutes.
Yeah.
They then withdrew the tweet and possibly fired someone.
Yeah.
But it did prove that yes, the market expects this ETF. We all know it's very likely to happen. It is not priced in.
Interesting.
Yeah.
Fascinating. Eh? And this is not speculative advice, but
correct.
That's interesting.
And then to your point about the SEC's actions, they've been taking a shellacking in the courts, right? Let's be honest. Yeah. They haven't actually won too much.
Except against, say, Binance, Kraken.
We'll get to those guys. But they are certainly depressing US action, but we work in a global market. And we are seeing growth in European exchange volumes and Asia in particular as well. And there are regulatory regimes, trusted regulatory regimes like the Singapore Monetary Authority and Hong Kong emerging, and that are open for business. And the flows of crypto businesses to those jurisdictions is increasing.
Yes.
So, it's a funny whack-a-mole thing going on where it's just moving over to a different jurisdiction, which is also trusted and has good solid rules.
Yeah.
Europe's got MICA, Singapore's got its MAS stuff going on, and they're growing healthily, very healthily.
Interesting. Okay.
Yeah.
So I'm thinking of this meme where there's several doors with the price of Bitcoin on it, and one is 15,000, the next one's 30, 65,000, and then $1 million. And everybody's standing in line for the $1 million door. No one's signing up for the $15,000 door. And it's true with property as well. No one wants to catch a falling knife if there's instability in the property market. Same thing with the stock market. everyone says buy the dip, but when the dip's actually really dipping, no one wants to touch it. So with Bitcoin, it's the same sort of thing, because we're constantly being told that Bitcoin is dead or crypto is dead. It's a scam. And it will take some time for that to flush out. But at some stage, the people are going to see that maybe this is the future, maybe. And in terms of speculating where price could go, I'm talking specifically about Bitcoin here, any high-level thoughts? And we're just speculating here. Like, are we talking about something that, because it's finite in supply, could be infinite in price, as measured against an infinite currency? What views do you guys have in terms of where the price action is going to go?
Just before we speculate on price action, which I'm slightly nervous about, but to your point of like, how people act on this, we've seen a really interesting stuff in our customer base where, volatility drives activity. And in the last month, we've had, a hugely higher turnover than we would, say the month prior.
Right.
But it's mainly driven by people buying. So our ratio of people buying into crypto versus people selling crypto is the highest it's been in 2 years. So that's an interesting stat.
That is
and
interesting.
I probably will not speculate on price, but Paul can.
Oh, I'm not going to speculate. I can tell you that Kathy Wood, who is the CEO of ARK Invest, so one of the ETF applicants, her base case, she came out last week and said in 2030 Bitcoin will be 600 to 650, which is dollars US.
No, you mean thousands.
Thousands of dollars. Thousands of dollars, yes. So, I don't know what to think about that. I haven't done the analysis, and I don't do that, right? But there are some really big numbers being kicked around. All we can tell you is that in a classic economic sense, supply is going to be reducing and demand will continue to increase.
Yeah.
And we like those dynamics.
Of course, yeah. Joanne, do you have any view on that?
I won't do price predictions, but what surprised me when FTX, the whole situation unfolded, that and not just FTX, a whole bunch of others, what surprised me that we recovered from that really quickly. So I thought the reputational damage done then would take potentially years to recover from, and the FTX dip we recovered from fairly quickly, and now the past 2 months we've seen Bitcoin go up as we have. So I was really surprised by that, and then you see other big the ETF applications. It's a real endorsement for me and sign of maturity for the market. So that happened a lot sooner than I thought. So
yeah, that's interesting.
So, Janine used the term tribal before, and inside of the crypto industry, there are definitely tribes. But if you think the Apple fan crowd, they used to queue up for the new phone is tribal, wait till you see Bitcoin as an Ethereum guys. They through the downturns, virtually no selling happened. We call it hodling, but the people who were just holding their assets, it's up to 80% now.
So what does that mean, that 80% means?
That people coins in people's wallets have not moved in a year.
Yeah,
over 80% of the entire.
Keep in mind, some of them have lost their wallets. Apart from that,
and also the number of wallets that are now in the black is in the price that they bought at is lower than the prices at now is. What was the stat on that?
Yeah, like 80% of them are in profit now.
Yeah, right.
So if you were already in profit and you're reading the tea leaves, going ETFs, halvings,
why would you ever want to get out? Is what you're basically saying?
I couldn't possibly say that, Darcy.
Pay off the mortgage, maybe.
Yeah, but. There's just, again, if you wanted to come into an industry where they fervently believe in what they're doing, this is one of them.
That's right. Yeah. It's one of this. Why I love covering this topic over and over and over again, because it is genuinely optimistic, and there's new stuff going on all the time. It's quite cool. So let's talk about the dark side of it, though. Well, not the dark side of it, more like the scandalous side of it. Even just today, we were hit with some amazing headlines. We have CZ, who heads up Binance. Binance is massive in terms of the crypto space. So he has been fined, or I guess he's facing criminal charges now. Anybody want to comment around what the backstory is there?
Yeah, well, so it looks like, Binance has been being investigated by the US Department of Justice for some time around 3 or 4 different issues, including not implementing good sanction controls, how they treat anti-money laundering rules and all that sort of stuff. And so Binance is, looks like they've done a plea deal around that, and they're just going to pay a massive fine. It's, somewhere between 2 and 4 billion is kind of the industry scuttlebutt. And as part of that, the CEO of Binance, CZ, is having to step down, and he can't have control for a number of years, or maybe 3 years.
Right.
He has to pay a personal fine, and he has pled guilty apparently to money laundering, which I don't think he's going to jail. I think he's but
this sounds like
it all broke today, right? So
it sounds like it's a negotiated thing.
It's a negotiated
thing. Doesn't necessarily
thing.
mean that.
So him and Sam Bankman-Fried won't be sharing a cell, despite the man's but they've paid the price for not implementing good, robust controls, is the way it seems to be playing out in their market, in that market.
So, part of me thinks that, there is no definition of robust controls when you're pioneering and you're moving into not necessarily robust controls, but there is no real regulation when you're doing something that hasn't been done before.
Yes and no. There's the regulation around anti-money laundering's been really quite clear, and it applies. Not all jurisdictions have been specific on whether it applies to crypto, but the principles are pretty strong on that one, and it's pretty obvious. There is definitely, I think, a lot of grey areas in the US particularly, and, Coinbase has been really vocal in calling for more guidance from regulators. They've sort of been putting their hand up for years saying, we're happy to comply, we just need to know what it is you expect of us. And it is unfortunate that in the US we've been seeing this regulation by enforcement where, you don't find out what the regulation is until you get told off for not following it. So that is challenging, but not all of this is in that grey area. There is some quite black and white stuff, and sanctions is a very black and white one. There's no grey area around sanctions. That one's really clear.
Yeah, okay. And then we have Kraken. Who wants to have a Kraken? Well, apparently the SEC.
Yeah. So the SEC is going after exchanges for running unregistered securities exchanges, and they're doing it with Coinbase, and I think Gemini's also had those things.
And Bittrex,
Bittrex
got their lawsuit. They settled a while ago. And news broke today, I think, that Bittrex Global is now shutting down. So the SEC went after Bittrex US. All of these companies had US-based arms as well as their global entities. And obviously we're not sure. Bittrex haven't said why they're shutting down, but the assumption is that the flow-on effect of the fines that they had for Bittrex US and the result and, their trading slowdown has probably made it untenable for them to continue.
Okay.
Yeah. Okay. Because it's expensive to run a compliant exchange.
Yeah.
Like it is.
I bet.
So, the Kraken case echoes the Coinbase one as far as I can tell. The SEC has said you're selling unregistered securities, and Kraken and Coinbase's argument back is, well, you haven't actually said these aren't securities, and we don't think they are.
Yeah.
So
this feels like the final, hopefully, the final kind of push, right?
Well, and it's running in tandem with that. There's been the whole XRP Ripple case as well as to whether or not there's a security. So these cases sort of, I guess, support each other or very interlinked.
Yeah, they are. The whole regulatory crackdown and the ETF, in my view, there's a lot of parallels going on here. And I think next year it will be just interesting to see what happens. But why is it relevant, though, that, say, with the likes of Binance, because they're so massive, what impact will that actually have on the broader ecosystem? Because we've kind of already been punished for the last couple of years in terms of trust issues, right, with Celsius, Voyager, and FTX to this. So are we kind of now immune to bad news in this space, or is it going to really just tip us over the edge?
I think you probably, if you don't know that Binance has been in the gun, you've had your head under a rock, right? So the market barely moved today.
Yeah.
$4 billion for a company Binance's size is, painful, but I don't think
it's out of
world ending.
Hundreds of billions, maybe. Who knows?
World ending. Yeah. I mean, the volumes they've been doing would suggest that they should be able to deal with it. And again, back to the tribalism in the industry, it's kind of like Kraken's up for the fight. The Jesse Powell's already come out, boxing gloves on. So, and the industry's kind of like, bring it, because we weren't. Because again, on the other side of that will be certainty. It either is or it isn't.
Yeah.
And then the market will know.
Yeah.
And so it's actually welcomed, to Janine's point around, having good, clear guidance. And so, but the people who are actually participating in the market, for them, it's all just a bit noise, right? They just
it's just a show. It's just part of the show. It's part of the fun.
Yeah.
We have to have these personalities. And speaking of personalities, let's talk about Javier Milei, because I love saying this guy's name. So he's every libertarian's fantasy leader. So we have new presidente of Argentina, pro-Bitcoin, apparently. He's taking a chainsaw, literally, to the status quo. I think it's a fascinating story. And the media has already been kicking into gear to kind of discredit him and bring him down. But does anybody have any view on this guy named Javier?
One of our developers who's from Argentina, I believe, he said he was up against the Minister of Economics, I think, and that clearly didn't work. So might as well try something radical.
So at heart, it's a change vote. He has come out and been pro Bitcoin, but I think actually what he's more famous for is he's going to get after the central bank in Argentina, who have, at 140% inflation, you've failed.
Yeah.
And
the Fed.
And the Fed. Yeah. And, there's talk that he's going to try and dollarize their economy. So, become using the US dollar. I don't.
Do you think that's like a stepping stone to become more like El Salvador?
Because there's a lot of thematics around the decline potentially of the US dollar as the global reserve currency. Like we're seeing, the BRIC countries trading between themselves without using the US as an intermediary settlement. We've seen a lot of, Latin America has a lot of angst and pushback against the US dollar and sort of the troubles they've had through the IMF and the loans from the World Bank of, over decades, right? So it'd be an interesting step to dollarize given all of that history and also that current trend. And perhaps Bitcoin is a move away from that. But, going back to how we started on stable coins, right? Like there's a reason why Bitcoin doesn't make a lot of sense as a payment currency and why, I don't think it's really taken off in El Salvador. It's just too volatile. It doesn't work, right? And like as a crypto industry, like I'd love us to come up with, and perhaps not made by Libra, but that kind of concept of how can we create something that is stable but isn't controlled or linked to just one economy. And that's a really interesting challenge for crypto going forward.
Well, that's kind of like the Holy Grail, isn't it? To develop a medium of exchange which is linked to pure value, which is independent of the nation.
But then what is pure value, right? It's,
energy. Bitcoin. Hey, I'm at Bitcoin Maxi.
Link it to the sun, solar energy.
There we go. Yeah, totally. Awesome. So we've covered NZDD stablecoin. We've covered the Easy Crypto wallet, which is available on the App Store.
Yes, coming soon to iOS, so you can join the waitlist for that. Just click the link on our site, or hopefully by the time this goes to air, it might be already available.
Fantastic. And we've covered also a whole bunch of news events, so there's always lots going on in the cryptoverse. Thanks for joining me today. Now there's this amazing gift here that's been on the table here.
Sorry,
Janine.
It's not for you, Darcy.
Oh, come on.
This is I think I owe Paul definitely a thank you and probably an apology, because he came to me with this idea for a stablecoin probably a year ago, and I think my response was why. So, not always the great strategic thinker that, I like to make myself out to be. But yeah, Paul is really the father of NZDD. It was his initial idea and has really worked so hard to bring it to life, and got naming rights and has the honour of having the first ever minted NZDD in his wallet. So you can track down Paul's wallet by looking for the first NZDD.
As well.
But yeah, this is just a thank you, Paul, for
Thank you so much.
Yeah, a little christening present for your first digital child.
Can I christen it tonight? All right. Thank you so much. My first digital child.
First digital child. There we go.
Thought I'd done with children, but that's good. Thank you so much. Appreciate it.
Cool. All right, guys. That's it for today, though. So thanks very much.
Thanks, Darcy.
Cheers.
Thank you.
Thanks for listening into the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter, too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts, share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Ungaro & Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.
care in this.